The profit-taking activity by long-term holders was met by new entrants' demand, reflecting a wealth shift movement. Bitcoin's BTC ongoing bull market has marked a significant transition of wealth from long-term holders to new investors, according to a recent Glassnode report. The redistribution of wealth from seasoned holders to newcomers is a hallmark of maturing Bitcoin markets. Long-term holders have been realizing record profits, peaking at $2.1 billion per day, while new investors have stepped in with sufficient demand to absorb this supply. According to the report, this trend illustrates the expanding depth and diversity of the Bitcoin ecosystem, bolstered by growing institutional participation and strong retail interest. In 2024, long-term Bitcoin holders, especially those holding coins for 6 to 12 months, emerged as key contributors to sell-side pressure. These coins, predominantly acquired earlier in the year, accounted for 38.5% of realized profits since November, totaling $27.3 billion. Meanwhile, coins held for over 3 years have remained relatively dormant, signaling that higher price levels may be needed to motivate their sale. In contrast, coins held for over 3 years have remained largely static, suggesting higher price thresholds are necessary to incentivize their holders to sell. The report noted that this is a natural cycle within Bitcoin markets. As prices rise, long-term holders distribute wealth, allowing new investors to absorb the supply. Demand meets profit-taking, despite substantial profit-taking. By long-term holders, new investors have shown resilience, providing liquidity that sustains Bitcoin's upward momentum. Metrics tied to short-term holders, STHs, highlight their ability to withstand market corrections without triggering cascading sell-offs. For instance, while STH coins experienced unrealized losses during market corrections in August 2023 and September 2024, these losses did not lead to widespread panic selling. Instead, robust new demand stabilized the market and prevented significant downturns. Additionally, the current Bitcoin cycle has also seen reduced volatility compared to previous bull markets. The deepest drawdown was 32% in August, significantly less severe than corrections in previous cycles. Analysts attribute the stability to increased institutional participation, bolstered by the introduction of spot Bitcoin exchange-traded funds, ETFs, and a broader acceptance of digital assets. In addition to the buying pressure from new retail entrants, this institutional demand has significantly backed the market, ensuring liquidity during sell-offs and supporting price resilience. Further upside, Bitcoin's price has surged more than 150% in 2024, hitting an all-time high of $108,600 and currently trading at the $100,000 mark after a minor correction. The current cycle's 6% and 38% growth is consistent with prior halvings, such as the 501% gain from 2015 to 2018 and the 1,085% rise from 2018 to 2021. Despite these gains, the market does not appear overheated. Glassnode's AV/IV ratio, which measures unrealized profits, suggests the market has yet to reach the euphoria typical of bull market peaks. This indicates potential for further upside before profit-taking overwhelms demand. As Bitcoin's price dynamics evolve, the interplay between long-term holders and new demand will remain critical. While sell-side pressure may intensify as prices climb, the current resilience in new investor activity suggests the market is well positioned to sustain its momentum.